we've seen now is a digestion over time and not so much in price, since gold has held up above the $2,000 level. And yeah, maybe we've seen now this is the base camp, maybe above $2,000, and the launch pad for the next attack towards $2,100. And then, yeah, I mean, the breakout is still intact, I think.
Hmm.
And it really clears this former all-time high at 2075 and the broad resistance zone, let's say $2,100. Yeah, I mean, we could still quickly, given maybe some geopolitical turmoil on top, could quickly see a rally of $300-400 in gold still.
Gold prices show resilience, remaining near the resistance range of $2,042 to $2,040, despite a slight drop during early European trading hours. Various factors, including potential geopolitical tensions and continued market uncertainty, drive the recent bullish gold momentum. Florian Grummes, managing director of Midest Consulting, suggests that a 300 to 400 rally in gold could be on the horizon, propelled by geopolitical unrest and ongoing market uncertainties. Recent market movements, with slight U.S. economic weakness and a weaker U.S. dollar, have led to a substantial jump in gold prices. The price of gold reached $2,079 per ounce, nearing its highest daily close ever. Grummes refers to an earlier breakout in early December, which saw a significant move in gold from $1,810 to $2,150. This move, followed by a period of consolidation, indicates the market's attempt to establish a new base for gold prices. Gold prices experienced a strong rally in the latter months of 2023, driven by central bank purchases and mounting concerns over geopolitical conflicts. A weakened U.S. dollar and expectations of Federal Reserve rate cuts further contributed to the bullish sentiment, with gold reaching a record high of $2,135.39 per ounce in December. Analysts at Heraeus, a precious metals firm, predict that central bank gold purchases will likely remain above long-term averages in 2024. However, they anticipate a slight decrease compared to the record-setting pace of 2022. Despite this, elevated geopolitical risks and de-dollarization initiatives may still support gold prices, particularly among emerging market banks and the People's Bank of China. Join us as we explore the insights shared by Florian Grummes. Stay updated by subscribing to our channel and activating notifications. Thank you.
Gold has held up quite well, given the fact that we have a rather strong dollar, that we have higher interest rate environment, and that we have this party tech bubble going on and Bitcoin, ETFs, etc. And yet gold is holding up above $2,000. I mean, last week it quickly dipped below the $2,000 level, 1985, but here we are 8 trading sessions later and we're touching 2040 again. So the market is resilient. There is physical demand, there is central bank demand. Putting it all together, we had this breakout in early December after a fierce and strong move in gold from 1810 up to $2,150. So it was a $340 move in 2 months. So that needed to be consolidated and digested. And I think what we've seen now is a digestion over time and not so much in price, since gold has held up above the $2,000 level. And yeah, maybe we've seen now this is the base camp, maybe above $2,000, and the launch pad for the next attack towards $2,100. And then, yeah, I mean, the breakout is still intact, I think. And it really clears this former all-time high at 2075 and the broad resistance zone, let's say $2,100. Yeah, I mean, we could still quickly, given maybe some geopolitical turmoil on top, could quickly see a rally of $300-400 in gold still. The seasonality is still positive in spring. And again, I mean, holding up so well at these levels here, it seems that gold is sniffing out something. Maybe it's also pricing in already that the Fed will have to come to rescue to the market sooner than later. I mean, here in Germany, we have the Deutsche Pfandbriefbank, which is a rather unknown commercial bank, heavily invested in the commercial real estate in America. And they have serious troubles. Now the bonds are quoted at 20 cents for the dollar, which is like a massive sell-off in
Wow.
it seems that this could have maybe more contagion effects, ripple down effects, who knows? So this financial crisis that we've seen in March a year ago is somehow in the background continuing. And we have to see how this all plays out. And I think that this is another reason why gold is holding up rather well.
Grummes notes a historical pattern where the Federal Reserve has been slow to adapt the monetary policy to changing economic conditions, potentially leading to market corrections or crashes. On the economic front, the Federal Reserve has emphasized its commitment to rein in inflation pressures and achieve a 2% target. The Federal Open Market Committee said it would not consider reducing the target range until it had greater confidence in inflation's movement toward 2%. At the most recent policy meeting in January, the central bank staff briefed policymakers on the U.S. financial system's stability. Minutes of the meeting indicate that they identified significant financial vulnerabilities within the system. Grummes highlights that, despite some sectors of the economy showing resilience, a combination of economic indicators and data points suggests the possibility of a recessionary environment. Let's get back to the interview.
According to Mr. Powell, they're not going to lower interest rates anytime soon. They projected probably in May or June.
Right.
The first rate cut. Now with I mean, we talked about it the last time already, with the situation in the Red Sea and attacks by the Houthis. The cargo ships are having to do a much larger route now, and this obviously is inflationary in the end of the day. We will have to see if he will be able, according to the data that he's following. I mean, that's what he's always saying. He's very data sensitive, and basically they try to make decisions from one meeting to the next one. But
Right.
I think that in the end of the day, the market will decide the next move. And right now, I mean, there is a big party still going on in the AI sector. I mean, it's unbelievable. Some of the stocks are really getting, like, they're going vertical, basically. I think you can call it a bubble already, but who knows? I mean, it could still continue for a while. Once this thing is coming down, it could, create a crash, and then obviously he might be forced to lower interest rates rather quickly. We have to see how this all plays out. Generally, from the past, we know that they tend to continue way too long with one policy until the market basically is forcing them to change.
Right.
And usually it's too late. So that's what we've seen in 2008, when they basically hiked for 2 years and then stopped hiking in the summer of 2006. And then by 2007, it started to get nasty. In 2008, we had a full crash. This time it seems to last a little bit longer, but I mean, if you look at many of the indicators and statistics and numbers, it seems already very recessionary out there, and it's just the stock market. Actually, everything is Nvidia is holding together everything still. A bank term funding program would end. Many banks would be in severe problems rather quickly. So it's going to be interesting. And yeah, it could be that this is actually another form of new stimulus when they not only extended, but maybe even only the time period extending, but maybe also the amount.
Right.
To see. I mean, I think it's been a very important program. It was so complicated that most people didn't really understand it. And of course, it didn't make it to the front page of most of the mainstream media. But that's how they managed to kick the can down the road once again, right? I mean, remember, we had a bank run 1 year ago in America.
Gold prices in various currencies, including the British pound, euro, Australian dollar, Chinese yuan, and Japanese yen, have recently reached all-time highs. This has led to speculation about whether gold priced in US dollars will be the next to achieve fresh all-time highs. According to analysts at GSC Commodity Intelligence, it's not a matter of if, but when. The previous year's data reveals that gold priced in multiple currencies reached new all-time highs an average of 100 days before gold priced in US dollars. This suggests that it may only be a matter of time before gold in US dollars follows suit and reaches record-breaking levels. That's all from us. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.